Good morning, everybody. Scott with Pratt& Associates Realty here. If you've been watching the news and the stock market, you're probably concerned. It went way up. Now it's way down. Some numbers I want to go over. The NASDAQ went down 1,000 points. Bad. I don't think it's ever done that in my lifetime, but I've only been following this stuff for about 8 or 9 months. Bitcoin's down 50,000. I put a tiny portion, I put like a tiny itty bitty money in there just so I can, monitor it. And it did exactly as I thought it would, continually disappoint me. I think it's a scam. We'll talk about it in a different video. VIX indicator, it's a fear gauge, is up like 143%. The last time the index number was 65 was during the COVID shutdown, March 9th, 2020. I want to talk some about an interview. And if I haven't said already, I want to talk some about an interview with Austin Goolsbee, Claudia Sahm, her thoughts of what's going on right now, Jerome Powell, of course, and Mike Zuber over at One Rental at a Time, and possibly the Uneducated Economist, and what Warren Buffett is doing right now. So this is going to be a pivotal time. I would encourage everyone who watches my content or any of this kind of content, continue to follow this. This is going to be a really critical time. Yes, I know the stock market is down, but this is a good time to buy in at a discounted rate, but we'll talk about that in a second in my closing thoughts. Anyway, guys, Austin Goolsbee was interviewed this morning. That's one of the voting members of the FOMC. Sorry. Basically, his assertion is that the data does not suggest it's time for a cut. And he feels that there's too much pressure in making them cut. He said, now, if the numbers do get to that point, they'll consider it. But as of right now, don't get afraid because of this big global sell-off and whatnot. The markets are going down. He says, do not get, and he says also this is talking about the Fed's mandate, stable employment full employment and stable prices. He says the law doesn't say anything about the stock market. It's about the employment and it's about price stability. Yeah, he's right. If the market moves, give us an indication over a long arc that we're looking at a deceleration of growth, then we should react to that. Okay. So, he just, as he says, his data does not tell him that right now. Jerome Powell said something kind of similar, but the whole unemployment increasing up to 4.3%, and we'll talk about that in a second, kind of cast doubts on that, but he still is let me see. What is this something he said? It cast doubt on Fed Chair Jerome Powell's assertion directly after the latest policy meeting that the labor market appeared to be normalizing gradually, which would allow the central bank to take a bit more time before cutting rates. So yeah, they're still wanting to keep rates as they are. Claudia Sahm, do I have her up here? Claudia Sahm even said that she felt like no. So what is the Sahm rule? The Sahm rule is when it's about the unemployment numbers and how that unemployment number is related to a possible recession. Now, at the beginning of the year, we were at 3.7%. Actually, I think around December, early January, we were at 3.7%. We were now at 4.3%. Any change in unemployment in a 12-month cycle, 0.5 or increase in unemployment means that there is an indicator of recession. It's been accurately predicted 2001 and 2008. I think a couple other times it was accurately predicted. But she said, this is herself, I'm not concerned that at this moment we are in a recession, she told Fortune magazine. No one should be in panic mode today, though it appears that some might be. A lot of people are. She said the key metrics of the economy still look really good. And she even said that this unemployment figure might actually be, her rule might actually be in a state of exception at this time. The Uneducated Economist talked a lot the past, I think, month or two, maybe even 6 months about the Fed really wants to get their power back, get their federal funds rate away from the lower bound of zero. And so they are going to hold as long as they possibly can. There's a lot of pressure for them to cut. Citigroup, JP Morgan, even, what's his name? Jeremy Siegel. Yeah, Jeremy Siegel from the Wharton School of Business is all these talking heads are coming out on the news and saying they've got to cut. We need an emergency cut right now. And Mike Zuber, and I agree with this too. And it's something, and I've been watching this in the market. And even we're down 6.49% right now, just because the market's reacting that way. So the interest rates already have come down. But I checked on 2 listings this morning, and they're already under contract. multiple bids, 4 days on the market, multiple bids. We're reviewing offers at 1 p.m. today. So you're going to start seeing that again. I know everyone says, oh, housing affordability, they got to cut interest rates. Well, as soon as they do that, you'll have the animal spirits uncaged, and they will drive up prices again. Your supply will be down, and builders are not building right now. We're not building at the rate that we need to be building in order to get some kind of price stability in the future. And what will happen is we'll have to start over like we did this year, or even 2023, where we had nothing for sale. And it will drive up prices even higher. You'll have multiple bids way above asking price, and it will be even higher it will be even harder, for a buyer to buy a house. If you're wanting to buy right now, this is probably your month. Of course you're going to say that, Scott. You're a real estate agent. You just want business. You just want a commission. Meh. Come on, man. Let's grow up. I'm telling you that this might be your month. If interest rates stay, if they come back up, it might be a little bit better. You might have a little bit less competition, but interest rates are down. Market's kind of like, waking back up. It's in the middle of its nap and it's waking back up. So, yeah. I still have a lot I want to talk about. And even Mike Zuber said on his podcast or his YouTube channel that he really does not want to see an interest rate cut. Well, he's a real estate investor, so of course he wants to, if the interest rates are higher and he has cash, then, but if he's going to finance the debt, a lot of investors have to finance their debt. You still have, tons of price corrections. I felt like we were heading in the right direction. And then because everyone just wanted so badly these interest rate cuts, they're all selling off, and European markets have already sold off, and I don't know if that's actually helped them. But I feel like there's this war going on between like Wall Street and the Fed wants their power back, and they want to be able to stimulate the economy in the future. Because as the uneducated economist said, and it was hard to explain or it's hard to follow his thoughts, but he said that they have found out in the past that interest rate cuts do not stimulate the economy. They have to use people's faith and use forward guidance and use their words to manipulate the markets into doing what it wants to do. But even that, to me, is somewhat dangerous. And just even this week, realizing how in panic mode the entire stock market is, or the entire market sphere is, that may not work either. Anyway, guys, what else? Warren Buffett is sitting on a wad of cash. He is sitting on a wad of cash. Let's see what this is about. Started dumping Bank of America shares. He's got over $200 billion. It's a question of how long they're going to sit on it. Basically, Buffett, things aren't attractive. That's what he said. Confessed at a Berkshire Hathaway annual meeting in May that he is open to putting more capital to work, but high prices are giving him pause. So he kind of knew something was going on before. He said, I think it's a fair assumption that cash holdings will probably be about $200 billion at the end of this quarter. We'd love to spend it, but we won't spend it unless we think a business is doing something that has very little risk and can make us a lot of money. It isn't like I've got a hunger strike or something like that going on. It's just that things aren't attractive. Well, fine. I mean, he'll do whatever the heck he wants, and I'm with him on that. He just doesn't like the way that things look right now, so he pulled his cash out. And I mean, yeah, it seems like we're kind of heating up, if you will. But anyway, guys, I have encouraged you in the past to continually to stack cash. I was putting mine in ETFs. I have lost a lot of money. So as I've told you in the past, I don't advise you to go out there and just dump all your money into ETFs. I mean, I have a long-term plan, a 10-year goal. I'm not licensed to give you financial advice either. So please don't all I want you to do is stack cash, because 66% of Americans cannot put their hands on $1,000 in the case of emergency. Most people are living paycheck to paycheck right now. Even $400 is a challenge for a lot of people. Cash. Most people are living off of credit cards, and that's bad. Very bad. Stop the spending cycle. Stop being their little slave they're a little spend slave. It's just like the old cotton mill towns or the coal mining towns of the deep South and of the Appalachian South, where they would have a company store and you were issued scrip, which wasn't real money. It was fake money. So basically the cotton mill town owners or coal mining town owners would just keep all their money, and they made a lot of. It was slavery. It was literal, actual, true slavery. And they owned these people. You could buy trucks, houses, clothes, and you owed it back to the company. Anyway, guys, this video is already way too long. I hope it helps you. I try to carefully research and curate this message and go out there and look for good information. Also, something else I want to tell you to do. Well, do it if you want. You don't have to. But I buy pieces of silver. It's down today. It's down to $27 or something like that from the year peak of $32 back in May. This is not something that you're gonna just, this is gonna make me so much money, speculative or whatever. It's not. It's a hard asset that you can hoard. It's just, it's face value. You can lose a lot of money investing in this stuff, or you can keep your money. Basically, that's all this is. This is just a way for me to just keep what I have, and more or less for black market trading. But anyway, guys, like I said, I'm not licensed to give you financial advice. I just want you to continue to focus on your financial health, because it's just not going to get easier. It's going to get harder and harder and harder. And if you're starting to save cash now, it's going to be much better 10 years from now, 20 years from now, that you've been saving $100 a month in cash every single month for the next 10, 20, maybe even 30 years. Anyway, guys, thank you so much. I know it's a long video. I hope this helps you. I hope, there's a lot of information. I get it, but stay tight. Don't panic. Don't you do it. Do not panic. I'll talk to you later. Bye.